the streets seem to be latching on the cyclicals last couple of days, and today is no different. Banking's stocks are in focus ever since ICICI Bank numbers are out. In fact, there's a tilt towards getting back as far as banking and financials are concerned. But there, at the same time, one small section of the market who believe that the second wave will have some impact, however small it might be, on the lenders. In fact, NBFCs, where the fear is, especially microfinance kind of companies, that the impact could be higher. So we thought of getting a special discussion on this entire landscape of financial, which is the highest weight on the index as well. And Avneesh Sukhija is joining us from BNP Paribas to talk more about it. Avneesh, good afternoon. Thank you so much for your time. Now, first of all, let's put to rest this argument about the second wave restrictions and lockdown impact on asset quality of lenders across the country. What are your thoughts here?
Right. Good afternoon, Ajay. Thanks for having me on the show. From a sector perspective, so we are quite bullish from a long-term perspective. So if you look at banks, balance sheets are probably in the best shape in the last 2 or 3 years. Margins, no pressure. Credit offtake from a 12-month to 18-month perspective seems, they will achieve mid-teens. And from a long-term structural story of India, premiumization and penetration, these are the two themes. So we do believe financials is the best way to play it. Now, having said that, in the near term, with respect to the second wave, if we try to quantify the impact, be it on loan growth, so probably we're looking at 1 quarter credit offtake going away, margins, minimal impact. From an asset quality perspective, even if things worsen, we expect RBI and the central government, like they did last year, to introduce measures this year too. So we don't really expect, the bottom line to be hit. In terms of earnings, just purely, based on credit offtake, we're talking about a 6% hit on banking earnings, which, we believe is pretty manageable. So the impact should be manageable of the second wave.
Avneesh, let's break down, this entire sector into pockets and understand where do we see more structural earnings growth going forward. Let's talk about the private sector banks, which are going to benefit from credit cycle takeoff, especially corporates, which are getting back in a capex mood. And also, then there is a large public sector pocket as well, the large cap public sector, where increasingly people are wanting to take some risk, which may not have worked for a very long time, but now it's working also in terms of valuations as well. Then there are pricey NBFCs, solid business models, great franchises, but do not come cheap. And then there are all these doubtfuls, which are not very expensive, but they really do not turn out to be structural stories for several years now. Where do you see best earnings quality over the next, say, 4 to 6 quarters?
It has to be private banks. When I say that, multiple drivers for earnings, right from they are actually in a position to aggressively grow purely because of the balance sheet, which is not the case with barring, say, one PSU bank or a couple of PSU banks. Other banks are still quite stretched from balance sheet perspective. And likewise, even NBFCs, majority of the NBFCs, given the second wave, they'll have to be slightly cautious. So private banks can actually, change gears and go aggressive with respect to gaining market share. Even from digitization perspective, the whole fintech wave that a lot of people talk about, I actually believe, the likes of, say, an HDFC Bank, Axis, ICICI, Kotak, all these four are right there in terms of mobile banking market share, or in terms of tech competing with, the best of fintech players in the country. So even from a digitization perspective, opex improvement you would probably see coming through for private banks as compared to, say, public sector or NBFC. And third is asset quality. So they're sitting on a good chunk of contingent provisions in case things go bad from here on, which I don't expect. Probably after June, it should be better off. So they'll again be in a much better position. Even if they don't write back, they'll still be in a much better position to handle asset quality stress. So private banks by far would be the pick with respect to earnings growth.
Right. Avneesh, stay with us. In fact, let me get my colleague Poonam also to talk about
Sure.
one such private bank which will be coming out with the numbers, especially in light with how ICICI did. So then we'll compare these two. Poonam, fill us in on what to expect from Axis.
Well, after seeing a resilient quarter coming in both from HDFC Bank as well as ICICI Bank, it's time for Axis Bank, and profitability is likely to be better both on a quarter-on-quarter basis as also if you compare it on a YOY basis. Axis Bank is likely to report profits of 1980 crore. This is significantly better than the last quarter performance. Net interest income is seen growing at 13% YOY. Margins may likely expand slightly on a sequential basis to 3.6 to 3.7%. Credit cost may still remain fairly high but moderate on a sequential basis, and some of the analysts are penciling in slippages to the extent of 6,000 crores. Loan growth is likely to improve on a sequential basis, largely led by retail loan growth momentum. However, it's still likely to be subdued around 7 to 8% on a Y.
That was a slice of what to expect from Axis. Avneesh, within private sector also there are retail-oriented private sector, which is HDFC of the world, Kotaks of the world, and there is corporate-related private sector. Where do you find more comfort in terms of quality of earnings versus what valuations they are trading at?
So, if you have a portfolio and you have to allocate a certain percentage, I actually still believe, the HDFCs or the Kotak would probably take away the maximum or a sizable allocation. Having said that, ICICI and Axis are not far behind when it comes to the retail push. The pecking order would be HDFC and Kotak, and then ICICI and Axis, just primarily going by also the last 10 to 15-year track record. So that also will have some, weightage to play into the earnings growth. Definitely, HDFC Bank, Kotak would be the prior picks, and then followed by, say, Axis and ICICI in terms of stability of earnings.
Mm-hmm. How are you looking at the NBFC space? I mean, I was just looking at the list of your stock recommendations. You have a very good basket of, NBFCs, which are small home ownership plays like Repco, etc. Then there are rural-oriented NBFCs like Mahindra Finance, and you have purely urban ones as well, like Bajaj Finance, which is also coming out with results, and LIC Housing, PNB. What are your preference of or order of preference? What kind of plays are you having here?
So in NBFCs, given the second wave is here, and this time, say Maharashtra and NCR, which is probably 15 to 25 or 30% of the loan book for most of the vehicle finance or even housing finance players. I think this time the impact on vehicle finance, be it commercial vehicles or two-wheelers, could be pretty severe, or at least more than what you would probably see in case of housing finance companies. So that would be least preferred right now. Housing finance is extremely attractive from a valuation perspective. In fact, if you see someone like a Repco, they're actually trading close to their liquidation value, even say a BNP Housing Finance. So from a purely valuation perspective, these two look pretty good. And then you have the likes of, say, Bajaj Finance, which have a solid track record, great management, the whole emphasis on digitization and fintech. So that's something you cannot ignore. And if you're talking about a nominal GDP growth of, say, 14-15% coming back, it's the likes of Bajaj Finance who will actually be one of the first among the diversified financials to give you a significantly high growth. So I would stick with Bajaj Finance, followed by housing finance companies, and then you'll have the auto finance companies. That will be the pecking order.
Still with us, Poonam, what are you expecting from Bajaj Finance? Avneesh seemed to be having a positive view on that one as well, but what to expect from quarterly numbers, Poonam?
Well, Bajaj Finance would be in focus. In fact, the profits are likely to grow at a healthy rate of 40% YOY at 1328 crore. However, the net interest income is likely to fall by close to around 4% while the margins are likely to remain largely stable. NII is likely to be lower on account of lower AUM growth. AUM growth was up nearly around 1.4% just on a YOY basis. Disbursements are, however, likely to improve on a sequential basis, and also the company does expect the core AUM growth to resume to pre-COVID levels in Q4. Provisioning is likely to come down on a sequential basis. However, I guess the entire focus would be in terms of the commentary of the impact of COVID's second wave on disbursements, growth outlook, as well as how the delinquencies have so far shaped up. So far, Bajaj Finance has held up well. In fact, overall, the entire commentary also in terms of the update on the collections would be important. In their recent update, they had stated that the AUM was down 4.8% quarter on quarter and it was up 1.4% YOY, and also the deposit book had grown at a healthy pace of 20%. The stock trades at 6.4x FY22 price to book and 5.2x FY23 price to book. And in fact, if you look at the overall brokerages also, most of them do still have a positive stance, but of course it is trading at high valuations.
Thanks for that. Closing comments, Avneesh, out of the entire portfolio, if I were to ask you 2 to 3 stocks which have the best possibilities of be it returns over the next 12 to 18 month period, the valuation they are trading at, the earning potential, and which give you most comfort in terms of quality of management and the way management executes the plan which they guide for, which would those names be in your view?
So I'll actually pick HDFC Bank, Axis, purely from a turnaround story, and it can really surprise on the upside as and when the economy recovers. And I also have a bit of life insurance, so HDFC Life. So these 3 would be my 3 picks for the next 12 to 18 months.
All right, Avneesh, we'll let you go on that one. Thanks so much for joining us with your inputs today. That was Avneesh Sukhija, looks at financial space, gave you a lot of inputs about what kind of portfolio you can have if you want to play financials going forward. Time for a very short break. On the other side of the break, we'll come back, analyze more stories for you and stock-specific analysis. It's going to be a big day for earnings as well. So all of that lined up after this break.